Oh my god, friends, Gevo and Hyliion are we broke right now. So in this week's portfolio update, I want to go over, well, among other things in my portfolio, I want to go over how badly these two stocks are doing. And more importantly, I want to go over what I do or how I handle stocks that drop this much. And no, this is not going to be a hype video. I promise you, this is not going to be a hype video. And this is not going to be a video where I go over, yes, we're long-term investors and we do, we don't care about short-term price fluctuations. We already know that. Basically, I want to go over how I tell the difference between, investing for the long term and not caring about price fluctuations and catching a very slowly falling knife. So other than these two stocks bringing down my entire portfolio's performance, how am I doing? Well, other than these two stocks, I think I'm doing well. We got Bank of America holding strong at 81.4% gains. ARK is inching up there. We're finally at gains with ARK. Cisco, we're 35% gains. Now, I mean, a year and some odd change ago, we were down 30%. So I'm glad to see this stock turn around. Facebook, we are up. We've almost doubled our money. FedEx is holding strong at 13.7. Now, this is one of my stronger conviction stocks, and we'll get to that in a second. We got Intel. It's seen some pullback. Now, we're only up to 12.7% gains. Now, if this stock drops below my cost basis, I will start buying, but for now, we're holding on. Johnson & Johnson, nothing to say there. We're holding, nice gains there. Realty dominating. Pfizer doing pretty well. Qualcomm is... We're getting closer to doubling our money with that, and I think we're gonna double our money in the next 6 months or so. But we'll see there. Revolve. I mean, despite the stock market being absolutely stupid and selling off Revolve, like it dropped 8% today. Well, it dropped 8% Friday on no reason, and during earnings, on powerful revenue, on powerful profit, powerful guidance. It just dropped 20% during earnings, and it climbed back up, and then it lost all of its gains since the all of the gains it had since the earnings. Sony, we're doing really well. I'm actually pretty glad it didn't sell it, even though I said I was going to do that several times. But I'm going to continue holding on to Sony until until a better opportunity comes along. AT&T, it's inching its way back up to a gain, so we'll see how that goes. Tapestry's got earnings this week. We'll see how that goes, but we're doing really well. We've 3x more money. So Tesla, it's finally inches its way back up. Verizon, it's holding steady. If it drops, I might nibble on some more shares next week. We'll see how that goes. And Walgreens, we are finally up to a gain. Now, if it drops, I will continue buying heavily into Walgreens, and that brings our total portfolio at $56,662, and we are up 33.7%. And as far as the moves I made recently, we got some dividends from Realty. I bought Gevo, I bought a little bit of Hyliion, I bought more Gevo, and I bought some AT&T. And as far as my Ethereum is concerned, I am up to 1,100. As far as total equity, up 63% by the month. Like, we're actually doing pretty well with Ethereum. We started off pretty weak, and with the volatility in the market, it might go back down to that much. But for now, at this moment in time, I think we're doing pretty well. So on to the matter at hand. What do I do when stocks I've invested in lots of shares into crash this much? Like this much. And now we're not talking about, crashing over the course of a month. We're talking these two stocks haven't had a good week since February. These stocks have been crashing since February. Now, Gevo and Hyliion did try to make a slight comeback after earnings in May, but that all went to shit. And what do I even do when stocks have been crashing this long? Well, what I like to do is I like to go back to my thesis on the stock. So let's take another stock, for example, FedEx. Why am I invested in the FedEx? What is my thesis on FedEx? Well, I think FedEx is a stock with high financial performance that the market really grossly undervalued, because the market does stupid stuff like that all the time. FedEx has high financial performance and massive growth potential as it expands into other countries. And so far, my thesis is proven correct. Like, FedEx continues to grow throughout the quarters, and so far that my thesis has not been challenged. Let's take Cisco, for example. Why did I invest in Cisco? Well, Cisco was one of the first stocks I bought. I don't work for Cisco, but I do work with Cisco products, and I specialize in them. My working thesis is that all the problems that happened to Cisco over the past couple of years was not Cisco's fault. It continues to perform well despite everything, despite being affected by outside factors such as the trade war with China, which is still going on today. It has not slowed down. And then followed by the coronavirus. And I mean, once the greatest impact from the coronavirus sort of abated, I mean, things started improving for Cisco. Now, Cisco has earnings coming up, I think, this week, and we'll see how well his performance has continued. Now, let's take a different one. Let's take AT&T, for example. Let's take one that's not doing well, at least as far as the stock performance. What's my thesis with AT&T? I think that AT&T is a turnaround play for me. It's a stock that has made some bad decisions over the past 5 years, which thankfully I was not invested in AT&T during those 5 years. And I thought that it's more to media, once the market started coming back around, as far as the results from the trade war, the results from the pandemic coming around, and especially once 5G started going out and being, accepted into the commercial market, that AT&T would score greatly from that. And once people started coming back into the theaters, once people started making movies, that AT&T would do very, very well. And for the most part, that's true. And as far as AT&T as a dividend stock, it's a beast as far as dividends is concerned. And that has mostly been true, except for the fact, AT&T likes to shoot itself in the foot. Like the latest big change is that AT&T is spinning off its Warner Media, and as a result, a few years down the line, is slashing its dividend. And the stock has dropped since that announcement. Now, it's slowly inching its way up, but it has dropped. Now, once I get hit with a situation like that, I refer back to my thesis. How well is AT&T doing as far as my thesis? Well, it's spinning off its Warner Media, which is a pain in the ass. However, we, as investors, will own shares of the new company that Warner Media is going to become. I will still own a very good stock with high financial performance that will have, as a result of this Warner Media spinoff, greatly reduced debt, which is my biggest problem with AT&T. So I do feel comfortable holding on to AT&T down the line, as AT&T becomes a much more agile company that can focus more on its 5G. And the fact that I love Warner Media, well, I still get to own the company that Warner Media is going to become. So I feel comfortable holding on to AT&T for long term, and even buying more shares down the line as the stock price drops. Now let's go to Gevo. What is my thesis on Gevo? Well, I have a whole playlist on Gevo in which I go much more in depth, but for this video, I'm going to keep it short and sweet. I think that now that their Laverna facility is starting back up, I think that the revenues should start trickling back in. So, as we know, Gevo is performing financially like shit. But now that facility is back, the revenues should start coming in. And in 2022, once the RNG plant goes online, thanks to their new agreement with the BP, the revenues should really start pouring in, and we should start seeing the stock price go up. And in 2024, once their net zero plant goes online, and they can start honoring their 1.6 billion and then 1.6 billion take or pay contracts in place, and then the 20.6 billion that's on the table, 2024 is when the money should start really rolling in. And as long as Gevo holds up their end of the bargain, they actually build the plant on time, they actually build the RNG plant on time, and the net zero plant on time, I think that this is money on the table. Now that the stock price is down this much, let's evaluate how far Gevo has come along in that thesis. Well, so far, Gevo has already started building the RNG plant. They are slated to begin construction of the net zero plant in the first half of the next year. And as far as we know, there aren't any delays on that. So right now, I feel comfortable holding on to these shares of Gevo and even buying more until we get wind of delays, significant delays. Now, if that happens and that gets delayed by years or more, at that point, yeah, I may consider cutting my losses. But as of right now, I feel comfortable holding on to Gevo. Now, let's talk about Hyliion. What is my thesis on Hyliion? Well, my thesis was that their hybrids would start bringing money this year, because that's what Hyliion came out and said back in 2020 before they went public. And then in 2022, once their ERX trucks start going into production, we should start raking in the money from that on scale with their estimates. Now, Hyliion, I am a little worried about that. I'm not alarmed, but I do have concerns on that. And so how do I feel about the stock price? And how do I feel about Hyliion's goals? Well, so far, Hyliion is doing everything that it can in order to get these projects out on time. I am a little worried that every time we hear from Hyliion, it's tapering off its expectations a little bit. Like, for example, we're not getting revenue. We're barely getting revenue this year at all, even though they said we were going to get this year. Now, we do know that's probably due to supply issues and maybe some other things, but the supply issues aren't really Hyliion's fault, but as a pre-revenue company, we do have to take that into consideration. Hyliion can't do what it's doing forever and without revenue. And we also know that commercialization of the ERX has been pushed back. It was supposed to happen at the beginning of 2022, and now it's going to happen, as of their remarks in their latest earnings, it's supposed to happen at the end of 2022, with volume production happening after that. Now, we don't know if that's going to happen still in 2022, or if that's going to happen in 2023. So, with my knowledge of that and the drop in stock price, how do I feel holding on to the stock? Well, Hyliion is doing everything it can. It is expected to start bringing in revenue at the end of this year, and I expect the revenue to continue in the hybrids throughout next year. Now, we don't know how substantial that's going to be, so that could be a problem. However, I do feel comfortable holding on to the stock as long as Hyliion continues executing on their plans and it doesn't get delayed too much. Now, if Hyliion delays the ERX to 2023 or beyond, that may be my cue to sell out. If that does happen, I may consider cutting my losses. But for now, I will continue holding my shares as of right now. But that's how I feel about Hyliion and Gevo as far as their performance, as far as them meeting their goals in relation to the stock price as of right now. But anyways, take care, have a great day, and eat your vegetables.